You want to build wealth through real estate but don't know where to start? The BRRRR strategy might be just the shortcut you've been looking for. This is the secret weapon behind how a lot of investors go from one property to an entire portfolio, all without winning the lottery. Stick around, because in this video, I'm going to break down exactly how the BRRRR method works, step by step, using real numbers and real talk. Hey everyone, if we haven't met before, I'm Eric Bekkers, an Ottawa realtor and investor, and on this channel, I help you make smarter real estate moves in and around the capital. If you've been thinking about investing, growing a rental portfolio, or just getting your foot in the door with your first property, the BRRRR strategy is one of the most powerful tools you can use, if you do it right. In today's video, I'll explain what BRRRR actually stands for, how each step works with real-world examples, the key to making your money back and keeping the property. Lastly, what to watch out for so you don't get burned. Let's dive in. So first, what does BRRRR even mean? BRRRR stands for buy, renovate, rent, refinance, repeat. Simple on paper, but powerful when executed properly. Let's walk through each step with an example of a $400,000 property here in Ottawa. Now, before you jump to the comments and say that a $400,000 property does not exist, reach out to me, as I have one that will be hitting the property within the next month that could be perfect for a BRRRR. Step 1, buy. You want to buy a property below market value. This could be a fixer-upper, a distressed sale, or even something in an up-and-coming neighborhood. Let's say, for example, you find this property listed at $400,000 that needs work, but you know the after renovation value will be $500,000. That's your opportunity. You purchase it using a mortgage with 20% down payment. That's $80,000 plus closing costs and maybe an extra cushion for renos. Step 2, you're going to renovate the property. Here's where you add the value. You're not gutting top to bottom unless that's your thing and what you want to do, but you're making smart, strategic improvements. Think kitchens, bathrooms, flooring, paint, maybe finishing a basement unit. You want the finished product to significantly increase the property's value and rental potential. Let's say you spend $40,000 on renovations, and now you're into this for $440,000. Step 3 is to rent. Now you get your tenants in. The key here is cash flow. Let's say the units bring in $2,500 a month. You're covering your mortgage, taxes, insurance, and you've got a little bit of money left over, plus the property is stabilized and performing. That makes it attractive to lenders. And this brings us to the next step, which is refinance. This is the magic moment. Once the renovations are complete and you've got tenants in place, you go back to the bank or your mortgage broker and say, hey, this property is now worth $500,000. You request a new mortgage, let's say at 80% loan to value, which is $400,000. The bank agrees, pays off your original mortgage, and if your new mortgage is larger than what you owe, you get that extra money back in your pocket, often tens of thousands of dollars. In this example, you bought at $400,000, spent $40,000 on renovation. The property is now worth $500,000. You go ahead and refinance at 80%, which is $400,000. You're going to get back most or all of your initial investment. Once that initial investment is returned, we move to step 5, which is repeat. That money back in your hand, you can go out and do it again. That's the whole strategy. You're recycling your capital to grow your portfolio without having to save 20% down over and over again. This is how investors scale. Here's some key tips for success. You need to know your numbers up front. If you're not confident about the after repair value or renovation budget, you can easily overspend and get stuck. Next, you need to work with a great mortgage broker. Not all lenders allow quick refinancing, and some have seasoning periods. You need a strategic plan with your mortgage broker right from the get-go. Factor in vacancy, repairs, and long-term maintenance. It's not just about the refinance. You want this to cash flow too. Last, don't over leverage. Just because you can refinance doesn't mean you should pull every dollar out. Leave a little cushion in the property. Make it so that you're breaking even and your tenant is paying down your mortgage balance and you're getting equity appreciation over the years. If this sounds like a strategy you'd like to explore, book a free consultation with me. I work with both first-time investors and experienced buyers across Ottawa who are using BRRRR to build serious wealth. Drop a comment below if you've ever considered doing a BRRRR or if you've done one. I'd love to hear your experiences so far so that others can learn. If you found this video helpful, make sure to hit that like button and subscribe for more real estate content every week. The BRRRR method isn't a gimmick. It's a smart, repeatable system that's helped thousands of investors grow their portfolios. but it only works when you do your homework, understand the market, and run your numbers. If you want help identifying BRRRR-worthy properties in Ottawa, reach out and I'd be happy to guide you through it. Thanks for watching. Until next time, happy house hunting.